Afternoon, everyone. My name is John Jiminod, EVP of Production here at Angel Oak Mortgage Solutions. We'll get started here in about a minute. Just some housekeeping stuff. We are going to do a deep dive into our bank statement program, which is our most popular program. And I'll introduce our two subject matter experts in about a minute. This is being recorded. This is live. Everything we're doing is on our website. So you have access to this also. But we'll get started here in about a minute. Make sure everyone's logging in. If we don't get to all your questions today, we will have your account executive reach out to you before end of day today. So I cannot see who's logging in, so that's the only thing. So all right, that's a minute past the top of the hour. All right, again, my name is John Jim, and I'm EVP of Production here at Angel Oak Mortgage Solutions. Today we're going to do a deep dive into our bank statement program, which is our most popular program. So I'm going to introduce our subject matter experts. Stacy Flanagan, please introduce yourself.
Hi guys, thanks for joining us today. I am Stacy Flanagan. I am in the Tampa Bay area of Florida, and I have been with Angel Oak since December 2013.
Really? 12 years. Wow.
Yes, and I was 20 years old when I started.
Yes, exactly. And then, sorry, what was that, Stacy? Sorry.
Let's just go with that.
Okay, we will. Hey, and also with us is Jack Stevenson. Jack, please introduce yourself.
Hey guys, thank you guys for joining us today. Very excited to be here. Started with Angel Oak since I was 15 years old. But I've been with the company since for about 5 years now and running.
Yeah. So again, we're going to go deep dive into our bank statement program. Put all your questions in the question queue. We'll hopefully get to all of them. This is going to be very interactive. And but before we get started, we're going to launch a poll question. And that poll question is, who has originated a bank statement loan in the last 12 months? And while we're going through that, while everyone's getting into to vote, like self-employed borrower is the fastest growing segment in the industry. And there's an average of about 430,000 new business applications a month. And that all spiked, obviously, during COVID. Everyone decided to either have a side hustle or, just get out of the rat race and start their own business. So, but so when you're looking to grow your business, we're going to teach you how to find these borrowers and how to pre-qual them, how to get rates for them. So we're going to do everything today from start to finish. So, okay, here's the poll. And all right, thank you for those who voted. 55% have not originated, which is pretty good. Usually it runs around to 60 to 70%. So hopefully all these webinars we're doing and all the education that Jack and Stacy are doing out there is getting through. So, all right, let's get started. We're going to go in, like I said, everything we're going to do is from our website. So Stacy, take us away with the highlights of our bank statement program.
Sure. I love those polls, and I love the statistics that John just gave out of all the people and all the new businesses coming into fruition, especially when a lot of people lost their jobs during COVID. It's interesting to hear that, exciting to hear that. There's so much potential out here. And guys, don't be afraid of this program. It's so easy to do. We do all the work for you. We do it up front. You have your income calculated for you up front. So, lean on your account executive to walk you through every step of the way. I promise you, these are easy programs to do. The bank statement loans, you can use personal or business bank statements, and you're looking at using 12 or 24 months. We go down to a 640 mid score, and that would give you an LTV of 75%. And we go all the way up to a 90% LTV with a 720 mid score. Recently, we added onto our maximum loan amount. So we're up to doing a $4 million loan amount, which Jack and I would love to see. So bring those on. And the minimum loan amount is $150,000 on these. We do purchases, rate and term refi, cash out refi, delayed financing. We are seeing a lot of delayed financing, and what that is somebody that purchases the property either with cash or maybe a private lender, and they need to turn around and recoup that cash right away to pay off that private with a high rate, or to get their money back into their account so that they don't have to pay interest on those. So we do the delayed financing on our programs, which helps. Owner occs, second homes, investment properties. And we only require 2 years seasoning on a bankruptcy, foreclosure, short sale. We do know that, things happen in life, and for whatever reason, maybe they had some hard times, and 2 year seasoning is not that long to be able to do a bank statement program, which is basically an alternative to your income calculation. So what we're going to do is you're going to send us your 1003 credit and your 12 or 24 months of bank statements, again, personal or business, and we're going to calculate that income for you up front. What's nice about us calculating that up front for you is you can get with your realtor and say, hey, wait, don't go showing them $250,000 houses based off their tax returns. Let me get Angel Oak to calculate the income for you using their bank statements, because we all know self-employed, you're going to write off as much as you can. So let us calculate that, and we may have turned that buying power from a $250,000 purchase price to a $600,000 purchase price. We see it all the time, and they can afford it. They just have a really good CPA that writes all their taxes off. So let us calculate that for you up front. We do that on a TBD property. So then you can tell the realtor, hey, now you can go start shopping for this size loan, which obviously will broaden their perspective on how much they can go shop for and how many houses they can now show them. What's also nice about our bank statement program is I kind of call it a hybrid, where we will also allow the co-borrower or even the borrower that has a second job, a W-2 job. We'll use that W-2 income in addition to their self-employed bank statement income.
Yes, so Stace, quick question on that. So what percentage of their W-2, and this wasn't a question, but I know we'll get it. What percentage of income would be W-2 compared to their self-employed?
So we do want to see at least 30% of the total income to come from that self-employed job to be able to use the bank statement program. So the W-2 income, we're going to use that with just the W-2s and pay stubs. We never want to see tax returns. However, whoever is the primary wage earner is the mid score I'm going to use. So like John said, 30% of the income has to come from the self-employed job, but maybe that W-2 wage earner is the one that makes the most income on a monthly basis. I'm going to use that W-2 wage earner's mid score. So sometimes that's going to help you out with a better rate, higher LTV. So those are kind of important things to notice, and it might be beneficial to add that W-2 borrower even if you don't need them for that higher score to get a better rate.
And to add on to Stacy a little bit, I also want to mention for the 45% of you that have originated a bank statement loan, if you've ever had loans that haven't gone through, whether it's a different lender, et cetera, we do this process up front. This is the pre-qual. This is within the first 24 to 48 hours, right? We turn through those income reviews, do a full credit file review of all of the disclosed information upon the pre-qual submission. So again, we're doing this up front, so you don't have to waste 2 weeks, 3 weeks of getting an answer, a conditional approval. We do this up front, and that pre-approval is as good as a close with us.
Yeah, so Stacy, I think you answered Elena's question here. Can we combine different types of income for the same person, and W-2 and 1099? We're going to talk about our 1099 program here in a little while, but And then hopefully Nina also said she's closed. She was, I think she answered the poll. She has closed a self-employed bank statement loan, but only one. So hopefully what she learns here today, there's going to be a lot more for Nina down the road. So looking forward to that. Yeah, so Albert, I'll answer this because I don't want them to have to say no. Albert's asking, can we use this product to purchase a mixed-use property? The answer to that, Albert, unfortunately, is a no. So, but thank you for asking, guys. Keep the questions coming. All right.
But the type of properties that we will finance is 1 to 4 units, townhouses, condos, non-warrantable condos, obviously single families. The non-warrantable condo is big here for me, especially down in Florida. We get a lot of non-warrantable condos. If you have one, your first question you want to ask is, why is it non-warrantable? Make sure it's something that we can do. But we'll use a non-warrantable condo all the way up to the 90% LTV. So we don't cut the LTV because it's non-warrantable. So again, here in Florida, we use a ton of them. That's huge.
So Joe's asking another question. Joe's asking his first question. Can asset depletion be used on top of this coming from an S corp? Unfortunately, we can't combine bank statements and asset depletion, although stay tuned. Stay tuned. Might be coming down the road. So. And
we do have an asset-based program. I know this is a different webinar. We do have an asset-based program that has no DTI. So if that is an option, reach out to your AE to ask them about the asset qualifier for your particular scenario. That might be, because then there's no DTI on that program.
Stacey, you want to talk a little bit about expense factors?
Yes, so we default to a 50% expense factor. So we all know businesses have to have some sort of expenses. So we're going to default, when we calculate the income for you, we're going to default to 50%. If 50% works, great, we run with it. If we need to have more income, then we can get a tax preparer or CPA letter stating what the expense ratio is for that business. And then we can use more of the deposits. So for example, they own ABC yogurt stand, and the CPA or tax preparer says the expense ratio for ABC yogurt stand is 30%. Now I'm going to use 70% of those deposits. We'll go all the way down to a 15% expense ratio, meaning we're going to use 85% of the deposits. And that's going to depend on what they do for a living. Do they have locations? Do they have employees? So that's going to be determined by those answers as well.
So Jack, we still got some questions coming in here, and we said this is going to be a deep dive here. So talk about what you want to see on a 1003 and what you'd like to see on a credit report as you're pre-qualing.
Yeah, sure, John. Well, hopefully on their credit report, they have great scores. But personally, so on your application, right, your 1003, your employment section, we want it to show the business. More specifically, if you're getting a business bank statement review, the employment section needs to match the business disclosed on the income calc, or the business that's on the business bank statements, right? So it needs to match. Your employment section needs to match your bank statements. With that being said, we want no income disclosed, okay? More specifically, upon the pre-qualification submission on your LOS, when you're printing up an IRLA, just input $0 for your income figure, because we're going to get that income calc. We're going to either send it back to you or advise what your borrower's qualifying income is. Okay. In terms of the real estate owned section, you just want to disclose anything, any properties that are disclosed on the credit report. So those need to match. Your real estate owned section needs to match. Obviously, we'd like to have the liabilities in the liability section. But with that being said, just disclose any properties the borrower owns. We don't need any commercial properties. If the borrower owns commercial, do not disclose it in the real estate owned section. But as of employment and the real estate owned section, those are the two things we're really looking for there.
And just to add on to that, guys, on the 1003, if you're using personal bank statements, we see a lot of people just write self-employed under the employment section. Don't just write self-employed. Our bank statement review team is checking to make sure that they're truly self-employed. So if they're a lawn care service and they don't have a business, they just do it on the side, just put Joe Schmo Lawn Care.
Lawn care,
The borrower's name, don't actually put Joe Schmo, but the actual borrower's name, lawn care or lawn even just put lawn service, then that's fine. Just don't write the words self-employed.
Self-employed, right?
You have to send it back and you gotta redo it.
Yeah, and that comes, Stacy, you just mentioned something, and I'll be the guy again to answer Albert because it's a no. So Albert's asking if you can combine personal and savings account. We can only use one or the other for personal, and we don't use savings. So, but we'll touch back on how we can use multiple bank statements. But I'm going to let Jack finish with the loan application and then what we want to see on a credit report too. So trade lines and stuff like that, Jack.
Yeah, of course. Okay, so trade lines, we're looking for 3 trade lines reporting for 12 months in reverse or 2 of 24. Okay, 3 of 12, 12 months in reverse, or 2 of 24 in reverse. We can count rent, so we will need, obviously, if they're, and this obviously applies to first-time home buyers. So if they are currently renting and have a 12 or 24-month history, we can use their rent history with bank statements and or rent canceled checks to use that as a trade line, as long as we have 12 or 24 months of checks there.
Cool, thanks. And Jack, while you're on, let's, we still have some questions coming in. Someone did ask about 1099. Let's give a overview of the 1099 program.
Yeah, of course. So 1099 would go up to $3 million in loan amount, similar to the bank statement. Your minimum loan amount is going to be $150,000. We can do a purchase, cash out, rate term refinance. We can also delay finance as well if they purchased it in cash or interim financing up front. We can delay finance that loan as well. This is for owner-occ, second homes, and investment properties. Obviously, minimum FICO scores starting at 640, 25% down, up to 90% LTVs with a 720 plus FICO. And similar to the bank statement program, no tax returns are required on the 1099 program. So what we're looking for is 1 or 2 previous years 1099s, and then year-to-date personal bank statements and to average your income over a 12-month rolling average. So yeah, and it's either 1 or 2. There's a rate difference between your 1 or 2, depending if you have a previous 2 years. Now we do need 2 years of self-employed history on this program as well. So, but barring, we do allow a 1-year self-employed 1099 individual, but it requires a 720 plus FICO, 20% down, and then a 1-year 2024's 1099, for instance, along with year-to-date personal bank statements. Okay. Anything else, John, I need to touch up on, or is that about it?
Good job. We're gonna scoot along to the P&L program too. So let's let me. Here we go. Stace, you want to just touch on some of the highlights here, and then we'll flip back to the bank statements because I've been writing down some questions that Jack just mentioned, and I want to make sure we cover them all. So.
Yeah, the screen got a little small there, John, or is it mine?
Oh, hold on. Let me see if I can.
Maybe it was me.
How's that? A little better?
Yep, perfect.
All right.
So with the P&L program, guys, if for some reason we can't go 1099 or bank statement, and you might ask, why would I go 1099 versus bank statement versus P&L? So somebody that's 1099, let's say they're a realtor, for example, their deposits into their bank statements can be very inconsistent. Maybe they're that realtor that does just, very big homes and they only have 2 to 3 big sales a year. That's a very inconsistent bank statement deposit. That's somebody that we are going to probably say, hey, let's look at doing the 1099 program. Get the 1099s for the last 1 year or 2 year, like Jack said, and let's look at that route. Now, again, on the flip side, P&L program. I don't need the bank statements. I don't need the 1099. They don't have to be 1099. They obviously still have to be self-employed for the last 2 years. Again, we go down to the 640 mid score, but this is going to be maxed at 80%. If we do 80% LTV, we can go down to a 680 on that LTV. We do need 2 months of supporting business bank statements to support that P&L income. Now, the P&L is going to be prepared by either a CPA or licensed tax preparer. It does not have to be audited because those are super expensive. But we will require 2 months of business bank statements to support that P&L income if you want to go to that 80%. Now, again, they're the realtor that the last 2 months of bank statements, I can't support that P&L income. It's too sporadic. We can still do a P&L. You're just going to be maxed at 70% LTV, and they do need a 720 mid score for that. Other than that, it's pretty much like all the other programs.
Stace, why would you flip someone to a P&L from maybe the bank statement? And before you answer that, Jack, Stacy, all of our account executives across the country, they're going to want to start probably with the bank statement, and then we'll go a couple of different routes. And Stace, what would be that reason you would maybe go from bank statements to a P&L?
Sporadic deposits, inconsistent deposits, but we can't go 1099 because they're not 1099. They're truly self-employed. That person that I just actually had one recently where they get 2 annual deposits. They're big. They're over 100 grand each, but they only get 2 in a 12-month period. It's too inconsistent for the bank statement program. Luckily, we were only at a 70% LTV, so we were able to flip it to the P&L program. And again, your AE will kind of direct you and be like, hey, I know we submitted it this way. This isn't going to work. Let's relook at this and go this route. So lean on them to really help you structure the loan. We've all been here a long time. So we kind of know the ins and outs and what way to structure it to make sure that it goes through underwriting.
Yeah, so Stace, Wendy's asking, can you repeat the credit required if they don't have 2 bank statements, the 70% LTV, I guess?
Yes, so it's a 720 mid score minimum required.
Thank you, Stacy. Jack, I wanted to get to this. You mentioned it earlier. We can do a 1-year self-employed borrower, right?
Right. Yes. We need 2 years in the same industry, by the way. So going back to, and this, fits the 1099 program or the bank statement program. So it fits both, overlays both programs. Now for that specific overlay, the 1 year, we do need 2 years in the same industry, verified with either W-2, so something to prove that they were in the same line of work. Other than that, it's for the 1099 program, the previous year's 1099 year-to-date bank statements. And then for the bank statement program, obviously, if they have a business, we'll need a business bank statement review for that. Both require 720 plus FICO and at least 20% down. The bank statement program itself, it's more for a business registered in the Secretary of State that was registered 12 plus months ago, but under 24, needs to be in the same line of work. But again, we'll use the Secretary of State along with a tax prepared letter to verify the business has 1+ year of existence.
Thanks, Jack. And someone's asking, what expense ratios, Stacy, do you use for the 1099 program?
Well, that's a really good question. So the 1099 program, we use 15% expense ratio.
Yeah. And another example, Stace, is realtors. They have inconsistent income, so they might use their 1099. So Jack, I would ask you, can you combine? What if a borrower has 2 businesses and wants to use both business banks, but has separate business bank statements for each business? Can you combine and use both of those?
We can. We can use up to 2 business checking account statements per income review. Okay, so we'll be able to use, if they have a lawn care service and if they have a restaurant, we'll be able to use 2 separate business checking accounts for income review. Okay, it's either 2 businesses or 1 personal account. Okay, but we'll be able to use 2 upon review.
And then Stace, fairly new enhancement. How many reserves do we require on this program?
We only require 3 months reserves now.
Yeah.
That's huge.
Subject property only too.
Yes,
There you
subject
go.
property. We don't care about all their other properties.
Hey, Jack, talk about interest only.
Yeah, no, we have a 40-year interest only option on the bank statement program. It's a 10-year interest only period followed by a 30-year fixed amortization. So, I mean, as rates are going down, you're going to see a major reduction in your payment if you decide to go with the interest only option. But so if you're trying to compete with ARMS, which by the way, we'll get to that in a minute probably, John, but
Yeah, we will.
If we're trying to compete with ARMS, you're trying to compete with a payment, you know, we always have that interest only option, you know, 40-year interest only, 10-year interest only period followed by your 30-year fixed amortization. So you can compete if someone else is offering a lower payment.
Yeah, it states what LTV, your kind of second home area, what LTV will we go up to on a second home?
Second home and investment will go up to 85% LTV.
That's
So
pretty big.
that, mhm.
Aggressive.
Yeah, it
Very
is. And Jack, what about gift funds?
Yeah, we allow gift funds. If it's a primary, borrower needs to contribute 5% down and 3 months reserves. Rest can be gifted. For second home investment, it's 10% down and 3 months reserves. The rest can be gifted.
And Stacey, we usually talk about, thank you, Jack. Usually we talk about closing in an LLC
Yes,
for
so we,
investment property.
right. If as long as it's an investment property, we can close in an LLC. The LLC can be created today. We can close in it tomorrow. So there's no seasoning on that LLC. It does have to be for investment purposes. So if they like own a barber shop, it can't be their barbershop LLC. It does have to be for investment purposes, and everyone that's on the LLC does have to be on our loan. So if there's a borrower on the LLC that you don't want on the loan because their credit profile isn't good enough, then you know, maybe they create a new LLC or have that other person removed off the LLC. So there's options.
And Stacey, and you might have said that. Did you say there's no seasoning on the
I did.
LLC? Okay, sorry, I missed that.
You're good.
I'm paying attention. I was just looking at some of the questions coming in. Sorry. Sure. Okay. Well, I'm never going to hear the end of this now.
No,
Hey, we didn't plan to cover this, but we're a little bit ahead of schedule. Do you want to talk about, Jack, do you want to touch on HELOCs, bank statement HELOCs, while we're talking self-employed borrowers?
Yeah, of course. Yeah, I mean, if again, you know, if in the cash out, we're kind of coming upon a cash out market with first position mortgage rates, you know, at a 2.75%, 3%, 3.5%. They don't want to get rid of it, right? Even if their balance is $10,000 left, right? They want to hold on to that first mortgage. So again, we do offer a bank statement HELOC. It overlays the bank statement program. We do need 2 years of self-employed history, but loan amounts do go up to $750,000 on the bank statement HELOC. Your max CLTV for the 750 is 75%. Loan amounts up to 500,000 up to 90% CLTV. So, and if you didn't, by the way, I think something's going on in the background, but we'll just
Okay.
we'll just let it slide. But yeah, it's live. Screw it, it's live. But yeah, so 500,000 in loan amount up to 90% CLTV with a 680 FICO score. So that is extremely aggressive there. We'll go all the way up to 90% on a second lien position bank statement loan. So if someone can't qualify with tax returns and transcripts, especially in the second lien, looking for a second mortgage or second position cash out, we'll be able to go bank statement option for them on the HELOC.
Tell those people in your office, Jack, to keep it down. So, Stace, anything else to add about the HELOCs? I mean, we see, like we said, we've seen multi-generational low rates, right, over the last 5, 6 years. And this has become a very popular product for us. And we were definitely one of the first to roll this out. So we talked about how many self-employed borrowers are out there, and if they're in homes, like Jack said, they do not want to take out that, historic low rate. So this is another option that we provide for that underserved borrower. So anything else to add, Stace?
I just actually kind of wanted to go back, and this kind of goes with the HELOC as well, but on the HELOC, you do have to be self-employed for 2 years. We don't have the 1-year self-employment option, but I do want to mention, as far as somebody, we see this a lot. Somebody is like a lawn care service, and they're doing it on the side, and then their accountant says, hey, why don't you create an LLC? It's going to be better for tax purposes. So maybe they created their LLC a year ago or 18 months ago, so they don't have that full 2 years with the LLC, but they did lawn service prior to opening their LLC. We just need a letter from their CPA or tax preparer saying, hey, he's been a self-employed lawn care service, filing a Schedule C for the last, 3 years, and just created his LLC 12 months ago for tax purposes. So that ties us in to give us the full 2-year self-employed history, because we do see that a lot where people start off just doing it on their own, whatever it is they're doing, before creating their LLC or business S corp. So I just kind of wanted to throw that out there. That goes for the HELOC, but also too for just the regular first mortgage bank statement program to get that 2 years history in there.
Yeah, so as I mentioned, we covered bank statements. We talked about what the loan application needs to look like, and what credit's required. And we're going to go into a few great tools here that we have available for you. So I'm going to go back to the home page, Jack, and let's go to, which has been updated, right? Just a couple of weeks. Again, things continue to change here. One other thing I did want to throw out, working with experience, you could tell how good Stacy and Jack are, right? They know their stuff, and all of our other account executives across the country know their stuff. They're like confessional booths for everyone out there. Tell them the whole story, and they'll position your borrower for a successful transaction, right? So, and even to that point, a good portion of the loans we close here at Angel Oak don't meet our guidelines. And it's because of people like Stacy and Jack that know how to position your deal. So when you come to them, tell them everything, and they're going to help you close this loan faster and on time. So I just wanted to get that out because no one was asking some questions on our turn times and stuff like that, but we'll get to that, Jack. So Jack, tell me what you want me to do.
Yeah, well, we'll check out the quick quote. So if, again, you have your scenario, you want a quick answer, you're trying to get an answer to your borrower to see if they're going to be able to qualify, you're going to go to our homepage and click on the non-QM quick quote. From here, depending on your company sign up, most of the time we'll just go through the broker channel, but go ahead and click on that broker channel, John. We do have a non-delegated correspondent channel, and please, reach out to your local account executive on that. But click on the broker channel, and then you're going to click on bank statement for your loan program. Okay, you're going to plug in your loan scenario, loan amount, loan to value, primary wage earner, mid FICO score, housing history, state, etc. And you're going to be able to see pricing that comes up on the right hand side once.
Yeah, I'm getting it, Jack. Easy. I didn't mean to tell me what to do.
Yeah, we'll give them a minute. We're at the top of the hour.
All right. There you go, Jack. Are you happy?
All right. And so on the right-hand side, you're going to see your pricing for your borrower and in this case, borrower paid compensation. John, you're going to go ahead and select your rate option, and this is what we're going to qualify, or we're going to use this as your qualifying rate. In terms of DTI.
Jack, let's talk about the one thing that we just rolled also. So let's talk about the availability of some ARMs here. You touched on them briefly.
Yes, of course. So we just rolled out a 5-6 ARM and a 7-6 ARM. So now, again, if you're trying to compete against a different rate that someone else is offering, you will now be able to see, look at your rates. Your rates are going to decrease, obviously, 5, 6, and 7, 6 respectively. And so, yeah, you're going to be able to select those options as well. Something we just recently rolled out over the last few weeks.
Yeah, and Jack, I just want to add also here is does this cost you anything to run this? You can run this 24/7, right?
24/7. Submit all the pre-quals you guys would like. Just keep it running. So,
well, Jack, and this is the first step, right? After talking to their account executive, this is the first step they're going to take in order to get you a pre-qual, or what we call internally a quick qual, correct?
Correct. So not only is this going to be used so you can quote pricing, you're also going to be able to submit your pre-qualification, in which we're going to give you an answer within 24 to 48 hours. The way you're going to do that is, as you see John scrolling through the screen, you're going to go ahead and select a rate option. And depending on your qualifying rate, that's what we're going to use for ratios DTI after we get income calculated for you. So you're going to select your rate option, select your account executive. You're going to input all of your information on the right-hand side: name, NMLS, email, company that you work for, your phone number, borrower name, and then below, what we're going to need for a pre-qualification is going to be the PDF version of the application, credit report, 12 months, 12 or 24 months of business or personal checking statements. And then below, we have the bank statement questionnaire. So, if you have that completed, you can find it on our resources page, a blank version of it if you'd like to download it. I do not believe that is required right now. But if you want to go ahead and do that and have that completed for us, again, the more you disclose to us up front, the better, because we're going to be able to make a better decision for your borrower, whether or not they're going to qualify or not, based off of what you disclose to us. So if you don't want to disclose much to us, we're going to be able to give you an answer based off of the minimal amount of documentation you've provided.
And Jack, when I hit that submit button, where does that go and what happens next then?
Sure. Once you hit the submit button, you won't see it here, but you'll scroll up and it'll say, congrats, you've successfully submitted a pre-qualification. It then comes directly into our queue. We'll see it. We'll send it directly up for income calculation, and we'll begin reviewing your borrower's credit, application, etc., while we wait for that income review to come back.
Great. Before we go into the marketing portal, Stacy, Angelica is asking, what's our DTI?
Oh, good. Yes. So we just look at 85% LTV or less. We just look at the back end DTI. Max is going to be 50%. So again, when you send these pre-quals over to Jack and I, or your account executive, we're going to look at that. So if it's, kind of getting tight towards 50 or over 50, that's when we're going to give you a buzz and say, hey, let's get an expense ratio letter to be able to use more income. But the max is 50%. If it's a 90% LTV, we do look at the front end at that point. So it would be a 40 front end, 50 back end.
Yeah. Thank you, Stacy. And thank you, Jack, for taking us through, that part of the process. So, Stacy, let's talk about the fun part, right? The marketing. How are we going to help everyone who's on this call, or who's going to get a copy of this? This will be sent out before end of day today, I believe we said. So let's teach all the great marketing tools that we have, and let's teach them where to go to get these borrowers. So I'm going to log in here. Yeah. Now go ahead, Stacy, you can talk about getting credentials and stuff.
Yep, everything that you've done so far that Jack showed you, you do not need login credentials for. Once you want to get into creating flyers or marketing materials, that's when you will need credentials. So reach out to your account executive. They'll get you signed up with credentials if you don't already have them. So just like John's doing, once he logs in, you'll be able to see across the top.
Sorry.
Yeah, give it 1 second.
Hold on. What's that? Okay,
Here, you just select anything there. Yeah.
All
right. So when you guys log in, this will just come up automatically, but because we can't log in as AE, we have to log in like as you. You can see this.
Today.
That's why John's having a hard time
Here
here.
for you guys. This is
We're
this
not
is
allowed
our.
on-
It's difficult for us. You guys are. It's easy. For
Yeah,
you.
and like you said, you do need login credentials here. So
Correct. Yeah. Again, if you're going to be registering a loan, and same with the flyers, you do need login credentials for that. For the pre-qualification, you do not need. So if you're in the process of signing up or would like to get signed up, you can still submit your pre-qualification, and we can get that running in the background while your sign up is going on simultaneously.
what is taken here? Did I click on something incorrectly, Jack?
No, it's just my account, John. You're living in my shoes for the day.
Well, let's talk. Let's
One
talk
thing
about. Go ahead,
Okay,
Jack.
go ahead, John. Oh, well, one thing I was just going to touch up on while we have a second, I was just going to talk about cash out limits, because you know, one thing that we're a little unique in is with a 700 plus FICO, you know, we go up to 2 million cash in hand, up to 60% loan to value. We can go past a $500,000 cash in hand after paying off the existing liens on the property. That's a huge benefit, because you know, I see a lot of you know, scenarios that come my way. A lot of different investors, you know, 500,000 they can't go past. We do go up to 60% loan to value and up to 2 million cash in hand with a 700 plus FICO score on the
Let's
bank
try
statement
this
program.
Sorry, Jack.
I don't know.
Stace, talk a little bit about the tools that we do have for marketing while I'm trying to get in here. So
Yes. So when you get in here, you'll see that actually you can kind of see it in the upper left side of the screen where it says marketing portal. That's where John's trying to get to at this point. So it'll come up at the top of your screen and it will say marketing portal, which is what you'll click on. All of our marketing materials are free for you guys. So if you know of an open house coming up, a builder is you want to stop by a builder's office, present them with flyers. All you're going to do is enter your information. Here we go.
all right. Want to start with flyers first, Stace?
Yeah, let's start with flyers
Okay.
since I'm already on a roll.
Sorry, didn't mean to interrupt.
No, you're good. So you're going to pick whichever flyer you want. You'll see that we have multiple flyers. We even have Spanish flyers, which I have no idea what they say, but we do have them available for those Spanish speaking realtors that you want to drop off, or again, builders you want to get in as their preferred lender. If you, on the left-hand side of the screen, so John selected the bank statement flyer. So on the left-hand side of the screen, you can choose your logo. You can put it on the left or right, doesn't matter. You can make it fun. You can co-brand it. Maybe you want to co-brand it with a realtor. So you put their logo on one side, your logo on the other side. And then you can upload a photo. I've had realtors and mortgage brokers take a photo together, and then they upload that because they're co-branding the flyer together. So then they'll do that, and then they're going to just enter their name, phone number, email address going down. And then, John, if you scroll up a little bit.
Okay. Am I in the right spot, Stace?
Nope, keep scrolling up or down so that we can see.
Okay, it's down.
Oh,
Okay.
sorry, down. Yep, down. So you'll see that they can put in their address. If you work from home, you don't want to put your address there, just leave it blank. Your NMLS number is required. Your company's required. We have set disclosures that we can send. Some businesses may have you required to upload your own disclosures. You just copy and paste them there. And then once you have all that information input, which obviously is super easy, you click the bottom, click to see changes, and it will populate onto that flyer for you. So everything will be on the flyer, your logo, your photo. Maybe you want to make it fun. Maybe you're a Tampa Bay Bucks fan and you want to put their logo on the side just to make it a fun, eye-catching flyer. You can do whatever you want, customize it however you want. Now, since you've done it in one flyer, it's automatically going to the other 20 flyers that are in our marketing portal for you. So you only have to do it once. It's on all the flyers. Print them as you need them. Obviously print them off in color. And again, it's free marketing. We've done it all. We've had our attorneys vet them all to make sure everything's legal and everything like that. So these are all done for you.
Yeah, Stace, and like you said, you do them once, you have all the flyers in there. I'm just going to go back to the, see if I can go back to the flyers. We have them for all of them out there, right? So our DSCR, which is another popular, you can do it for a HELOC, for all of those. Let's talk about social media, Stacy. Obviously, it's huge, and everyone's using it to grow their business.
Yeah, so social media is obviously, bless you, the wave of the future. It's huge. Especially the younger kids, Jack, are using it quite often. They're getting much of their business from social media. So what you're going to do is, these are just like enough to catch your attention. And I have brokers that will post one of our already done links right here, like LinkedIn. And if you scroll down, you'll see Facebook and, or scroll up, sorry, I say the opposite. You can grab any of these quick little blurbs and just post it on your social media, post it on your LinkedIn account. It's enough to get a conversation going or get people to respond. You don't even have to write anything else if you don't want. Make it that simple. Or if you want to add on to it about an experience that you had or a loan that you just closed, feel free to add that into your post as well. But even just doing something like out of sight, out of mind, right? Old school. So just putting something out there once a week, not too much so that don't become annoying, but you just post that out there once a week or something to keep in front of them and remind them that you are a mortgage broker. Remind them that you have these alternative ways of calculating income with the bank statement program or DSCR or asset. Why rent when you can own? Like any of these, just it kind of reminds people what you do for a living, and it reminds them to reach out to you if they want to refi looking for a home.
Yes, go ahead, Jack.
I was just going to touch up. I was going to say, if you're familiar with Canva, you're newer to the business, you know what Canva is, and you use Canva, you can download obviously those Instagram, Pinterest, little templates right there, plug it into Canva and customize it yourself. So again, you can use it for your own personalized marketing with other websites and other AI tools, whatever you want to use to be able to post whatever you need to get out there.
Yeah, we talk about serving an underserved borrower, right? The borrower who can't use tax returns to qualify. And this is where I usually go, this is an underutilized portal. You could basically create a marketing plan for probably 50 weeks straight with all the content we have here for you. And as Stacy said, it's just copy and paste. And as we've got it for Instagram and Pinterest, and we've got it for Facebook and LinkedIn, all done for you. So I'd encourage you all to really get your login credentials. And Valerie, yes, this is recorded. Sorry, your other meeting ran long. So, but we have them all here for you. Bank statement directed towards realtors, cash out. Jack mentioned cash out refinance, investor cash flow. That's our debt service coverage ratio program. They're all here for you. So I'd encourage you all to use them. And then last but not least, Stacy, let's talk about the one and only presentations.
So I have a lot of brokers that'll ask me about, can you help me do a realtor presentation? I'm not versed enough on your programs to speak intelligently, or if they ask questions I may not know the answers to. Contact your AE. We are more than happy to come out, do a presentation with you face to face, or if it's a Teams meeting or Zoom presentation, have us on there with you as the one that's going to talk about the program, but we're not talking about it from an Angel Oak standpoint. We're talking about it as your partner. So we're going to be there representing you. So as a mortgage broker. So it's not going to be us. You're going to still customize the presentation. It's a PowerPoint presentation that we have to offer. Take slides out that you don't like, add slides that you do like, but you're going to put your name, your contact information, because you're going to be the source of the contact for them. You want them calling you, right? So put your information in there, customize these slides. I'll do the presentation, or Jack will do the presentation. We'll go over, since we're the experts at the bank statement program and Angel Oak programs, we'll talk about all the programs and answer any questions that come in. And I've even had a broker where they also do loans that we don't do. They do, you know, FHA, VA, fix and flip. So he added his own PowerPoint slides. He sent them to me. Our marketing department added them on to, I guess he wasn't savvy enough to know how to do it, but yes, you can do it yourself too. But we're more than welcome to help you in any way as well. So if you want us to add some PowerPoints for you, slides of programs that you do, I thought that was super creative for him to do that, and it went over really well.
Yeah, Stace, you said it. You know, you go in there, you don't say anything about Angel Oak, not even a badge or a card to hand out. You're just one of their investors, and it's the most powerful presentation that you can do for your realtor base, because, you know, which was great, 55% of you have not, you know, which is a low, usually it's 60 to 70, have not originated a bank statement loan in the last 12 months. But you're not going to know all the intricacies and the answers. And Stacy and Jack just go in there and they say, I'm just one of their investors. That's it. And it's powerful. If you get 12 realtors in a room, I think I did the math. I'm going to look up here. 9% of the loans we close in our bank statement umbrella program, 1099, P&L, 9% are realtors. You're going to get one of their loans, and you're probably going to maybe get another one because of the debt service coverage ratio that Stacy and Jack are going to cover in its entirety. So it's a very, very powerful presentation. I know we got a couple more minutes. Stacy, you always use this example for that 1 year self-employed, and I'm going down a route here to say, where can you find these self-employed borrowers, right? You know, Eric Morganson, our AE out in California, opening up your front door, but Stacy, use the roofing company, right?
Open your front door and you'll trip over a self-employed borrower. But it's true. It is very true. You walk outside, you know, you might have even heard mine. My lawn service guy is out here weeding right now, weed eating. So you got your pool guy, you got your house cleaner, you got your lawn service, you got your car detailer. The self-employed borrowers are endless out there. The biggest one that we're seeing a lot, and they make so much money, are these social media influencers. They have been blowing it up with makeup tutorials and fitness and workout routines. And these social media influencers, God love them, they come out after COVID hit, and it became nobody could leave their home. So people were finding a way to make a business, and they're killing it. So again, that is a self-employed job. That is they're self-employed. So they're everywhere. Real estate offices, obviously, retail stores, yogurt shops.
Yep.
I mean, anywhere you go. What is that?
Oh, I was saying financial planners, CPAs, because they'll also have referrals themselves too.
They'll have referrals. Divorce attorneys will have referrals. Bankruptcy attorneys will have referrals. Yeah. So utilize anybody. Just make sure you're letting people know what you do. Sitting at a bar, talk to the person next to you. They might be self-employed, but tell everybody, you know, make sure they know what you do and that they can turn to you for any type of programs.
Yeah, that, like I said, just open up your front door. You know, if you're in a big transportation hub, truck drivers, right? They're out there. I can go down the list here. You know, advertising, marketing. Jack said CPA. I would market to a CPA, and we do have a CPA flyer in there. And I appreciate you bringing that up, Jack. It's the CPA that writes off everything for those self-employed borrowers. So why wouldn't you go, and everyone probably on this call has a CPA, why wouldn't you go to your CPA and say, hey, do you mind sending this out to you do such a great job for me, send this out to your database. I mean, that's an additional service that CPA is providing, and you're working hand in hand with that CPA. So
The other one
anything,
too, yeah, is financial advisors. They want their clients to keep their money in their market, in their IRA or 401k or mutual fund. They want to keep their money there. So they're a great resource too for business.
yeah. So again, it has been recorded, and we will send this out to you before end of day today. Jack, anything in closing?
No, I mean, at the end of the day, just rely on us to help you guys grow and expand your businesses in this space. I mean, if you're not used to it, for the 55 that haven't originated, just rely heavily on us on what we can and can't do. Just call us, ask us if it's something that we would consider, because we'd be more than happy to advise and help you guys, all the way through grow and expand your businesses and tap into this very underutilized market.
Stace, anything else?
Yeah, exactly. Like Jack said, use us. It's easy. I know we kind of gave you a lot of information at once, but don't be afraid of it. It's super easy. Rely on us. Let us know the scenario. Give us all of the details, and we will figure out which way to structure it, which is going to give you the best rate or the best LTV, the best option for the client. All in all is what we're looking for. So rely on us. They are super easy programs to do. Working with Angel Oak is super easy, and you will love it.
Yeah, for the 50, like Jack said, for the 55% that have not originated a bank statement loan in the last 12 months, it's not too late, right? It's not too late. We can help you do it. We've got the marketing tools for you. We have the expertise here for you also. So take advantage of it. If you're, and it's not, as I said, it's not too late. But if you're not originating non-QM, you are losing market share. You have Mortgage Bankers Association planned a 15% increase this year over last year, and is only planning a 16% increase in 2026. Non-QM is growing at a minimum of 40%. So if you're not closing non-QM loans, the whole assortment of non-QM loans that are available out there, you're going to be losing market share. Either this year and next year. So anyway, time has come to an end. I want to thank everyone for joining us. For those of you that have closed loans with Angel Oak, thank you for your business. And for those that have not, give us a chance. Nina, hopefully we can get you another loan, a bank statement loan, before the end of the year. So we'll have your account executive reach out to you. So for everyone, on behalf of Angel Oak, thank you for attending, and hope you finish your 2025 year strong. Thank you, Jack. Thank you, Stacy. Appreciate you guys so much.
Thanks, John. Thanks, everybody.
Yep, thanks.